It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, it's the Real Estate Breakfast. Yes, back again for another weekend that has crept up on us, breaking down for you the Australian property market and the bigger picture stuff with this global shock that is still playing out. I don't have any confidence, and I've said this before, until Trump is out of office, before some of this starts to really resolve itself. Got another very busy Saturday morning property show coming up. Understanding the Australian property market starts right here. And a big talking point this week has been Australia's national auction clearance rate. That has officially plummeted below 50%, landing at a striking 47%. I think that goes for Sydney as well as Melbourne. Also this week, major banks have dramatically downgraded their property outlooks, predicting a nationwide market correction. NAB is forecasting a 6 to 7% fall. They're saying median house values in overvalued markets like Sydney and Melbourne could rapidly lose up to $100,000. So we'll wait and see. That is a headline piece of news. Whether it actually happens remains to be seen. It is a Saturday, June the 27th, as we take you to the sunny Fraser Coast and to Scott Mitchell from Mitchell's Realty. And Scott, Hervey Bay, it has continued to show resilience despite higher interest rates and this weaker sentiment that we talk about. The region recorded strong annual price growth, but we've got a flip side to this. It's not all roses because at the moment the buyer inquiry is pretty quiet.
Yeah, look, mate, there is a saying in property, and that is confidence is key. And I don't think there's ever been a time where that has not more clearly been on display. We've had this before, like back in the GFC, where we actually did have a pretty significant correction. You know, they were spruiking back then, the broader media, that you were going to see property prices crash by more than 30%. And that was never the case, and it has never been the case. But unquestionably, our capital cities have cooled and since the budget announcements the last 6 to 8 weeks. And our buyer confidence here, or inquiry, I'll call it, across the bay, has more than 50% reduced, almost to the point, you can launch a listing that we would have expected buyers to have pounced on, like around the 800,000 mark back in April. You get excited if you get one email or a phone call. We always see our market here in Hervey Bay does quieten off around end of financial year. I suspect that probably happens elsewhere as well. And then it'll usually start to roll in August. And I think that pattern will happen. Unfortunately, our market and our decision makers are what they are. And we're still underpinned by a housing shortage. And that's what will continue to drive our market. Our values haven't been affected at all at this stage. And I don't expect our values to be impacted at all. I just think that we've got a bit of a pause in the market, which we've seen even last year when we had the big storm. Things will start to roll again once we hit August and we all move on.
Now, as I mentioned, NAB, they're saying that median house prices in overvalued markets like Sydney and Melbourne, they could rapidly lose up to $100,000. What do you think could happen, if this sentiment continues in a regional market like a Hervey Bay? Would you think that perhaps, some of the price could actually come off the top?
No, I truly don't believe we'll see any downward pressure on our values here. If you're actually a cash-ready buyer in a position to purchase, there's still plenty of them around. You've got less competition at the moment, probably across the board. It was only back in April, there was pretty fierce competition, particularly in that in Hervey Bay here, around that 800,000. If we put a reasonable property on the market at offers from 800,000, we would be pounced on within 24 hours of launching that property and expect to have multiple offers, and we were selling them up to 10%. 5 to 10% in excess of the start price. Whereas, as I just touched on now, we're launching those properties now, and I get excited if we get an email and a phone call on it. So if you're in a cash-ready position to purchase, the flip side to all this uncertainty is that now you've got less competition, and you may be able to negotiate a slightly sharper price without that competition.
Now, one of the biggest drivers behind Hervey Bay's property market is its population growth, something that we have certainly highlighted for the last 2 to 3 years, with thousands of new residents arriving every year. That demand does require significant new housing supply, but can the infrastructure keep pace with this rapid expansion that is going on? What are your thoughts around that?
Our local population base is continuing to expand, and at the moment, I believe our population for the Fraser Coast, we're sitting around 120,000. Back in 2006, I believe the population was sitting around 50,000. So we've seen more than 100% population growth in the last 20 years. And my understanding is that we're still forecast for 2% growth population per annum. That results in around 2,500 to 2,800 people moving into the region per annum, per year. And that would mean that we need somewhere in the vicinity of 1,000 or 1,200 brand new home products.
Yes, because Hervey Bay right now is seeing one of its largest periods of residential development, with more than 130 housing projects underway across the region. Infrastructure investment, it's becoming a key part of Hervey Bay's future. The projects aim to improve livability and attract more residents. That's in line with what you're talking about with the amount of numbers, the growth of people coming into the area. Do you think that the infrastructure will be a factor that possibly drives the next phase of regional property growth? What are your thoughts there?
Yeah, no, certainly. There's no going back from here for Hervey Bay, and that's why I don't feel we'll see any downward pressure on our values going forward, because we just can't keep up supply of new build products. And then we deal with a lot of people who've lived in Hervey Bay for a long time. In some cases, they just simply want to downsize. We've got a lot of like half acre to acre type properties and larger, like 5 acre, 10 acres. But we have a lot of half acre properties across Hervey Bay. The owners of those properties get to a stage in life where they just go, I don't want to look after 2,000 square metres of lawn and gardens. So they want to sell those properties and move into these over 50s lifestyle villages are popular. And in some cases, we get parties where they've lost a partner. Recently, I've had 3 ladies who've lost their husbands, and they can't look after the properties that they're currently in, and they want that security that comes with a gated community. So that's where these over 50s lifestyle villages really do have a place within our community. And they're low maintenance, they can lock them up and travel, and they've got some community aspects to that and security as well. So as those people transition out of those large properties into these lifestyle villages, you'll see that we're selling those established homes, and there's always people coming here to fill them as well, I can tell you.
Now, as far as the affordability factor is concerned, let's talk just briefly about the units and what is happening around that space at the moment.
Yeah, well, again, see, the unit market has really been strong, more so in the last 12 months, I would say, than I've seen it at any other time. It's always slightly behind our housing products, but at the moment, the average medium sale price on a unit is sitting around 600. And you'll recall it was probably only 12 months ago we were talking about you could get into one under 500. The unit market has been strong, and for a similar reasoning that people wanting to downsize that maybe don't want to go into a gated community but want to have their own independence will go into a unit complex.
We are talking to Scott this morning. He is in Hervey Bay. When we come back, Queensland's property market is showing a clear confidence shift. And just how important are private investors to Queensland's rental supply? We'll cover all of that next.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
Hey, a very good morning. If you are in Darwin, the latest PropTrack Home Price Index for Darwin is showing that the median home price is around $707,000. Median unit price, $478,000. That is, as far as the units are concerned, experiencing an annual price growth of almost 19%, which ain't too bad. And the median house price, 17.1% annual growth rate for houses.
You're listening to the Saturday Property Market Update.
It is really difficult for young people to get on the property treadmill, if you will, but I also think that some of them are starting to feel hopeless. And I would encourage anybody who has got first home buyers in their orbit, I would encourage them to go and see a mortgage broker. Even if they know they can't actually afford to buy anything now, what the mortgage brokers can do is help direct people for the planning process. They can go through what levels all of the incentives are at. They can talk about what your options are from an amount of deposit that's required. There's a lot more options out there than a lot of people are aware. And I just don't want young people to think this is absolutely impossible, because it is possible if you get good advice, but it might take, a couple of years of planning and saving, but get the advice you need now. Don't wait until you think you've got enough money in the bank to get the advice, because you'd be surprised the difference it can make.
It is a real estate Saturday. Yes, plenty of people heading out the door this morning to have a look at property. Good luck across this weekend. I hope you find the one, in inverted commas. Now, Queensland's property market, it is showing a clear confidence shift. I think we all agree on that. With buyers cautious, sellers are hesitating, and investors just reassessing decisions amid uncertainty following recent policy changes and market signals that are influencing activities right across the state right now. How do you look at all of that, Scott, in terms of Queensland as a whole compared to what's developing right where you are?
What a lot of people probably don't realise is that private investors supply about 95% of our rental housing across Queensland. So whilst the investors are perceived as a fly in the ointment by some under this current budget, they're vital to our economy and housing markets. They're supplying the properties that are being made available for rent. And as we know, even in Hervey Bay, it has softened a little bit, but we've still got a vacancy rate of about 1% across the board. And it's probably not a lot different in most areas of Queensland. Unfortunately, this current budget is not going to encourage investment across the board, and we were just starting to see reasonable investor interest coming back into our market, but mostly on established homes because of the affordability and the bridging on the holding costs. But new builds now, if you're going to get into a new build house and land package in Hervey Bay today, it's going to sit around 750 grand, and that property is going to return potentially 650 to 660. So that's not a highly attractive investment opportunity, unfortunately, whereas the established homes were offering better value and potentially higher capital growth in time. So until the dust settles around this budget, we're probably unlikely to see increased investor interest across the board, potentially nationally.
All right. Well, we will leave it there on our Saturday morning. Enjoy your weekend there, Scott, in Hervey Bay with the sunshine. And we will talk again. We will find out the latest news coming out of Hervey Bay in a few weeks' time.
Yeah, certainly, mate. Actually, I've got to say, Hervey Bay has not been as sunny as it could be. We've had onshore southeasterly weather with showers and rain persistently now for weeks. Bring on the dry season, I say.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
Is getting in early becoming the biggest advantage for property investors? What do you think?
I think if you can get into these markets at an earlier stage, you'll alleviate those negative points that I mentioned in question one, but also you've got the capacity then to hold that asset longer or further through a full growth cycle and really understand where it is in the growth cycle and when you're entering into that process.
A strategic approach means understanding where demand is heading rather than where it has already been. So what should investors focus on in this changing market in 2026?
Yeah, wow, Craig, what a hand grenade has been thrown in the last 6 weeks or so for property buyers in Australia. So first, I think you're going to see a lot of transactional or volume-based buyers agents load into units with high yields or regional cheap properties, and I'm talking houses there with higher yields. Both those options are going to lose you negative gearing, and they're going to give away the preferential capital gains tax on exit.
We connect you to the best real estate information across Australia. The Real Estate Podcast.